Business News shares of Elon Musk's SpaceX cleared for liftoff on the Nasdaq stock exchange in a matter of hours. After the largest initial public offering in history, the company is selling more than 555 million shares at $135 apiece, raising about $75 billion. That is 3 times bigger than the previous record held by Saudi Aramco. The deal valuing SpaceX at $1.77 trillion makes it the 7th most valuable U.S. company, just ahead of Tesla, also an Elon Musk company. The SpaceX debut regarded as a litmus test for investor appetite for AI exposure, ahead of expected mega listings from OpenAI and Anthropic. Nick Harper's watching developments for CNA live from Washington, D.C. Nick, apart from the sheer size, what makes this listing stand out?
Always do. This is a huge event. Eye-popping numbers involved in this historic IPO. A $75 billion IPO, a $1.7 trillion valuation. But we know that Elon Musk likes to do things differently, and he's doing things differently by taking his company public. He is setting a take-it-or-leave-it price per share of $135. Now, normally there would be a little bit of a range. It would give some flexibility, but he's saying that that is the set price. He's also opening this up to more retail investors than we would normally see. So ordinary investors, not just big companies out there. Normally they would allocate about 5 to 10% of all of the total shares to retail investors. At one point, Elon Musk was talking about opening up about 30% of the shares to retail investors. We're expecting that to come down a bit, potentially around 20% in total. And bear in mind that this is likely to make Elon Musk a trillionaire. And to put that into perspective, the average US household would need to work for 12 million years in order to achieve that amount of money. Huge amounts of money being discussed in all of this, but it also sets the stage for more AI IPOs just around the corner. Anthropic and OpenAI are set to have their IPOs later this year, and their IPOs could be even larger than SpaceX's.
As we mentioned before we crossed you, this is how this is a litmus test for investor appetite for anything linked to artificial intelligence. Is there anything we should be concerned about? Does the share value reflect actual value that at this point, as far as AI is concerned, has yet to be created?
Well, that's the big problem. There are a number of catches involved in this IPO. And really the main one is, has the company been overvalued? Is it worth as much as is being discussed in this IPO? Because if we look at its filings over the course of the last year, at the prospectus that it put together for the IPO, it tells a slightly different story. It posted a loss of nearly $5 billion last year. Its capital expenditures for the first quarter of this year totaled $10 billion, and that's double what it was last year. It also has a cumulative deficit since its founding in 2002 of $41 billion. And in its IPO prospectus, it warned that the company may never be profitable. Starlink is the only profitable unit in this entire company. And there are huge questions as well about the direction of this company. We know that Elon Musk wants to put AI data centers in space. That's untested. It's unclear how expensive or how difficult that'll be. And there's also been a question about the AI safety record when it comes to the chatbot Grok. We're expecting volatility over the coming months after today's IPO.
Thanks. Nick Harper there covering developments for CNA live from Washington, D.C.